Hello everyone, and a very warm welcome to this ICAS webinar on key employment cases, a year in review. For those of you who don't know me, my name's Justine Riccomini and I'm Head of Tax at ICAS, covering devolved taxes and employment taxes. I represent ICAS as part of my day job in tax policy at several HMRC and industry forums, including HMRC's Employment and Payroll Group, the Employment Status and Intermediaries Forum, the Construction Forum and the Share Schemes Forum, all of which I co-chair. And I also work closely on tax policy matters with the UK and devolved governments. So before we begin, just a few housekeeping matters to remind you of. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously. We'll be saving all your questions to the end of the webinar for the live Q&A session. Please also join the conversation today through the chat box accessed at the top of the screen. This allows you to comment or discuss with fellow attendees on any matters covered in the webinar. We're of course recording the webinar and we'll make it available for on-demand viewing afterwards in case you want to refer back to it or share it with others. The slides will be available on the events page on the ICAS website under the events listing. So we look forward to receiving your questions throughout the course of the webinar. It's only me that's presenting today, so it's me that you're talking to. And of course, we will try and get to as many of those questions as possible. If I don't get to all the questions, then we will put the questions on a separate sheet with the slides and the recording on the ICAS website with the answers to the questions that you've asked. So there's a fairly lot, well, I've got quite a lot to get through, let's put it that way, so I'll get straight on with it. If I just run through this now, the summary of what we're going to look at today. So essentially, I've got a CJRS case, Archangel, which was first tier tribunal, travel and subsistence and umbrella companies, which is the main pay case, upper tribunal, IR35 basic broadcasting, upper tribunal, tax avoidance case with the Marlborough case, which was the upper tribunal again. Many umbrella companies, a test case on that went through the first tier tribunal recently. National minimum wage, the Lees of Scotland case was an employment appeal tribunal case. And IR35, S&L Barnes, which was first tier tribunal, holiday pay, the Police Service of Northern Ireland, which was a Supreme Court decision, and also the employment status decision in Professional Game Match Officials Limited from the Supreme Court. So essentially, I've got 9 cases to run through at the speed of light, so I'd better get on with it, hadn't I? And I hope you don't mind, but I made myself an exceptionally good cup of tea just now, so before we started, so I'm going to have a sip of it before we start. So let's move on to the Archangel case then. Essentially, the theme that I've attributed to this case is, if you don't know what you're doing, take professional advice, which is always a good thing to do, isn't it? So what happened to this case was, it was a CJRS case relating to 2023. It was a property investment business. Unusually, HMRC filed its papers to the courts 2 days after the deadline, but the case still went ahead. So there's a lesson in that for everyone, in that if things necessarily don't go to time, it doesn't mean to say the case isn't going to go ahead. I think that the court clerk decided when they received the papers that the case was still very much worth hearing. So Archangel had appealed to the tribunal to contest some HMRC assessments, which were in respect of 2 employees. HMRC had filed some notices of assessment against Archangel Limited. And the assessments in this case totaled for 2021 £59,664 and £16,000 for the following tax year. So not an insubstantial amount in terms of a CJRS case. And there was quite a lengthy decision issued by the tribunal in this case, and I think it was probably because of the amount of directions that were issued by the Treasury when the coronavirus job retention scheme was actually live and running. Because there was practically, I think in total we counted that there were like 7 or 8 actual directions. And so everyone was constantly having to try to keep up with the law, keep up with the directions, understand what had changed, what hadn't changed, and how to apply that legislation. So there was quite a lot of confusion in the workplace for employers as to exactly what was the right thing to do and what was the wrong thing to do. But in this case, the customer or the taxpayer employer didn't really take any professional advice and just decided to try and interpret it themselves and do everything themselves. Excuse me. So there was a particular sort of phrase that was used in the decision, which referred to what a fixed rate employee was. And paragraph 7.6 of that decision defines what a fixed rate employee was. So importantly, that definition must be read in conjunction with other paragraphs in the direction that was issued at the time. But even though the decision is quite lengthy, I think it's worth reading because it does give us a very good insight into how the confusion arose, and why the liabilities were assessed in the way that they were. The tribunal found in favour of HMRC in this, and essentially we do find on reading this decision that it's a little bit like reading a novel about the sad and sorry tale of misunderstanding and employers being overwhelmed by bureaucracy. And if you don't know what you're doing as an employer, then for the love of God, please take professional advice. It always helps to do that. There was really no need in this case for this to actually reach the courts or for such big tax bills to rack up. So that essentially is my summary of the Archangel case. So I'll move on to the main pay case. So this particular case I've summarised as not that permanent or temporary workplace argument again, because temporary and permanent workplaces have been, there's guidance being written on them. The legislation was changed quite a number of years ago now. I mean, we are going back to the sort of early 2000s, and it's really a case of getting this right for once and for all. And people constantly misunderstand the temporary workplace definitions can actually be applied. So the main pay case is actually a good case in point. Main pay was or is a company that engages temporary workers, principally in health, education and social care. And their job is to supply people to employment agencies. So the company in this case appealed to the upper tribunal because the first tier tribunal found in favour of HMRC, and it was in relation to payments of tax and national insurance, free travel and subsistence expenses that it had been making to its workers back in December 2022. And the current decision was released on the 16th of August this year. Actually, one other thing that I wanted to comment on here about main pay as a business was that they were also involved in a tribunal against HMRC on a VAT matter, completely unrelated, but still relating, of course, to its main form of business, which is to the supply of consultants. In this case, it was specialist GPs into the NHS, and they were claiming that the supply was exempt. So that's a VAT matter. It's not an employment taxes matter, but nevertheless, it does give us a flavour that main pay is, you know, sort of quite determined to sort of argue its case, even though unfortunately it keeps losing its cases. So the first tier tribunal actually found that there was no overarching employment contract for all of these people. So that meant that each assignment that they were sent on was a separate employment. So as such, the workplaces under each assignment, under the employment rules in terms of travel and subsistence, were considered to be permanent workplaces, not temporary. So that makes the travel and subsistence payments non-deductible. So the other key point that came out of main pay was that even though main pay had actually gone and taken legal advice on this point about travel and subsistence, the first tier tribunal actually considered that they'd been negligent anyway. So apparently the advice that they received wasn't comprehensive enough or even based on the full fact pattern. So that's a learning point for all advisors, whether legal or tax advisors, in terms of actually making sure that as the advisor you are obtaining the full fact pattern of the case, and not necessarily, it's very sort of easy as human beings, whether you're an employer who wants to win your case against HMRC or even a legal or a tax advisor, to be human and kind of cherry pick the good bits out of the fact pattern and not consider the whole thing in the round. So that was a good bit of commentary in the actual decision. So main pay had agreed, had appealed the case on 5 grounds that the first tier tribunal had erred in law, and essentially this meant that the upper tribunal had to consider whether each of the workplaces was in fact temporary or permanent, and whether each worker was engaged on the basis of a single overarching contract of employment. So main pay's claim was that each of the assignments was a temporary workplace, which meant that it could pay the benchmark rates free of income tax and NIC. But HMRC said that in their opinion, everything was, came under one contract of employment. It came under a discrete contract of employment in each case. So therefore, the travel and subsistence expenses were actually relating to travel to permanent workplaces. So 2 completely different views there. And also the HMRC was claiming that the tax loss arose through the negligence. So the tribunal decided that all 5 grounds of appeal should be dismissed. Now, in doing so, they confirmed that the employees weren't entitled to claim an allowable deduction for reimbursed travel or subsistence expenses. And the upper tribunal also held that, each agency assignment did represent a separate employment, which in turn meant every workplace was a permanent workplace. So they concluded it was impossible for there to be one overarching contract of employment because there was insufficient mutuality of obligation as well. And that's because there was no obligation on main pay's part to pay a minimum guaranteed fee, and there was no obligation on the worker's part to accept a piece of work. The other thing that came out of the case was that the term regularly attends. The upper tribunal considered that the term regularly attends had been interpreted correctly by the first tier tribunal, which was one of the grounds of appeal by main pay. So that meant then that the deductible amount for expenses could only be the exact amount and not an estimate, and that no reasonable care had been taken to get the technicalities right, and thus carelessness was deemed to have been present. So, as we already know, the payment of travel and subsistence expenses from home to a permanent workplace is not allowable, because in general that fails the test at section 336 of ITPA 2003, where it must be incurred wholly, exclusively and necessarily in the performance of business duties. So therefore, the key to understanding cases like this one is to strip away the complex veneer of umbrella companies, which frightens the living daylights out of many people. The minute they think that managed service companies or umbrella companies are involved, that immediately complicates the issue in their mind. But actually what you can do is strip all that away, look at the pure facts of the case. What were the employees employed to do? Who was employing them? Where did they travel to? And were the employments connected or were they separate? So agents who are involved with clients who run these schemes need to ensure that the facts are clear, not to be intimidated by the layers of complexity. And as ever, as I always keep saying over and over again, a back to basics approach does help. And in this case, going back to the intention of the legislative provisions around travel and subsistence was what was required. So I'll move on to the next one, which is the basic broadcasting case. Now, my summary of this one is, will it ever end? Because this is quite a long-standing case. So Adrian Chiles is a well-known TV and sports presenter. He provided his services through his intermediary company, which was Basic Broadcasting Limited, under 2 ITV and 3 BBC contracts and some work elsewhere as well. Question was it IR35? In other words, was it covered by Chapter 8, Part 2 of ITPA 2003 or not? The Court of Appeal decided in the 2022 Kickabout case there was a certain set of factual arrangements that came into play there, and the Kickabout case is now considered to be one of the key cases in IR35 related cases. So a lot of the time now the judiciary, as well as referring to the sort of benchmark case of ready mixed concrete, for example, they're now also referring to Kickabout in decisions as well, and using that as a sort of marker for how to decide IR35 related cases. So in the Kickabout case, there was a 3-stage process to the hypothetical contract between the worker and the engager, and that helped to decide whether a contract of employment existed. So it's absolutely essential as an agent, as a tax advisor, that the agent understands that process and refers back to Kickabout if you're giving advice on IR35 related matters, so as to mount a successful defence potentially. So the first thing that needs to be done is to determine the actual contractual arrangements between the parties. And don't forget that what's on paper isn't necessarily what's actually happening in reality. So that's the first thing to do. Second thing is, what are the actual terms of the hypothetical contract, which is something that the court constructs in the absence of anything else, because they have to look at what the situation would be based on the fact pattern. So regardless of what's written down, regardless of anything, regardless of what people say was happening, what was actually happening? And thirdly, what does the hypothetical contract actually tell us? Is the individual working under an employment contract or a contract for services? So that's the key to that. So in this particular case for Adrian Childs, the judiciary also considered the Athol House case, as well as Kickabout and Ready Mix Concrete. So they were considered to be the three cases that swung it. And a decision was issued on the case on the 7th of June. Unfortunately, the upper tribunal didn't feel able to decide that particular case there and then, but remitted it back to the first tier tribunal for them so that they could consider or reconsider their original decision. So the upper tribunal did deem that they'd erred in law when they considered the extent to which Mr. Childs had been working independently of his various engaging parties. Now, unfortunately for Mr. Childs, this case had been going on for quite a number of years, best part of a decade, and it's taken its toll on him as an individual. Now the money at stake is 1.7 million, so obviously this is not an insubstantial sum of money. And I think the underlying point with this case is that the individual involved should not be forgotten about. This might be a tax case and people are eager to, make sure that either HMRC wins it or the taxpayer wins it. But in the midst of all the fighting, there's an individual and their life is also relevant to this. So for something to go on as long as it has, when we have, been debating employment status since the mid 60s, then this, you would think that it would not need to come to a case being as long standing as this one has been, and putting somebody through this kind of stress, because going to court is not an easy business. So let's move on to the Marlborough case. So this one is where I'm calling this one tax can be a bit like pulling teeth, because it does concern a dentist. And so what happened here was that HMRC lost its case at the first tier tribunal after it raised assessments back in 2020. So the first tier tribunal had concluded that the payments weren't earnings in this case, but instead they treated them as distributions or dividend income, which don't attract corporation tax, even though it was clear that the amounts were not paid out for the benefit of the trade. So this case concerns itself with Marlborough Dental Practice in the beautiful town of Marlborough. And it became involved in a tax avoidance scheme set up by Paul Baxendale Walker, who you may or may not know is relatively famous in the tax world for being involved in tax avoidance schemes. And I've put a link there to the Tax Policy Associates website, because Dan Needle, who we should all know and love by now, has actually written quite a bit about Paul Baxendale Walker's activities. So what had happened here was that a remuneration trust had been set up, which provided loans to Dr. Thomas, who was the sole director and shareholder of the Marlborough Dental Practice. And there was a pattern of payments going into the trust, which were mostly identical. The payments were so similar that they were practically identical. And then those payments were then made to Dr. Thomas. And 100% corporation tax deduction was then claimed in respect of the tax payments through the accounts. So, as an employment tax practitioner, what we need to look at is there's two key places to look. So there's earnings and under Section 62 of ITPA, and there's also Part 7A of ITPA 2003, which upon reading should tell the reader that schemes that are set up in this way are not going to work. So between Section 62 and Part 7A, really the advisor should come to the conclusion that this is not going to be a goer. So what happened here was that the upper tribunal had then decided that the loans were in fact inextricably linked to Dr. Thomas's employment and his being a director of the business, but that the amounts did not come from the employment, i.e. they weren't classified as general earnings under Section 62 of ITPA. So that then made the situation such that Part 7A either came into play and was relevant, or it didn't come into play and it wasn't relevant. So the upper tribunal found that they were made in connection with the employment, which in turn made it disguised remuneration under Part 7A of ITPA, which contains a much wider catchment scope. So fortunately for HMRC, the decision meant not only that corporation tax was in fact due, but pay-as-you-earn and NICs were also due, even though they weren't due under Section 62. So one point within the decision that I wanted to comment on was that the decision refers to the terms in connection with the employment and also nexus. So the nexus in this case was Dr. Thomas, because there's a couple of important issues here. Clearly, the upper tribunal wanted to communicate that whilst connected with is not without its limits, payments made to individuals through third parties does establish a viable connection, and therefore Part 7A can link the remuneration paid through third parties to a form of employment income in the right circumstances. And the other point which is worthy of note about the connection was the obvious connection or nexus between the director, the employment, the loans and the contributions from the business. And Dr. Thomas was the nexus. He was the linchpin in the case. So I'll just move on to the next slide and have a little sip of my drink. Because as you can tell, I've got a little bit of a voice issue. So let's move on to this case, which is a mini umbrella company's test case, L-Physic Limited and others. First tier tribunal heard this, and I've called this social media has a downside. So, well, it has several downsides, but this is just one of them. So essentially what happened here was that Operation Bakewell was a fraud investigation service by HMRC involving non-resident UK company directors in 2019. And what happened here was that 4 mini umbrella companies had been claiming the VAT flat rate scheme refunds as well as the employment allowance. So upon looking at this in more detail, HMRC's FIS team found out that a large number of Filipino directors had been listed as belonging to the same group of registered officers. So they determined that the individuals were the same as those suspected of wide-scale abuse of the employment allowance and the flat rate scheme for VAT. And if you've not heard of this particular concept before, it has been found to be extremely widespread and involving many umbrella companies. So anybody that's involved in the umbrella company market, many umbrellas, payroll, VAT flat rate scheme needs to be interested in this particular case. So what happened here was the investigation revealed that many thousands, 28,493 in 203 registered offices, to be precise, as I've written there, of many umbrella companies had been set up in this way. Some advisors in the UK and a King's counsellor had supported the notion that the scheme would work. And after that, it was then brazenly advertised on Facebook as a scheme. And there were many common procedural threads running through all the companies. So the setup, the change of the initial director following the VAT registration, a sequence of other actions, including clustering companies together under a group post-incorporation. So there was a trend there, and the same things were happening over and over again, which was fairly easy for the fizz guys to spot once they'd got hold of it. So the people that had been recruited through Facebook to act as directors appeared to have had total trust in the scheme without knowing anything but a few basic pieces of information. So they'd been recruited through Facebook and they just had blind faith in this system, didn't consider for a minute that they might be involved in something that involved mini umbrella company fraud. And so they were registered as UK directors, UK individuals, UK-based residents, individuals, and then they resigned and Filipino residents were appointed in their place. So this was a partial victory relating to the flat rate scheme for VAT and employment allowance. And the FTT concluded that HMRC were actually correct to curtail the use of these schemes. Thousands of other cases are also waiting to be heard now, which has obviously given the courts an awful lot of work to do and possibly clogged things up for hearings on other cases as well. And so we're waiting to find out news now of whether similarly structured mini umbrella companies will also be challenged by HMRC. It's an absolutely enormous exercise that they have to undertake. And of course, these things are changing all the time. The umbrella company market, mini umbrella company market, is really, in a massive state of flux, and HMRC is really trying its best to play catch up. So one thing that I wanted to just add at the bottom of there was that there was a Latvian case called Ablesio, which is a 2013 case. Excuse me. From the European courts, and that may help HMRC to put forward its arguments on the facilitation and knowledge of VAT fraud points, because so if you're an advisor in that area, it's worth having a quick look at the Ablesio case, I would say. So I'll now move on quickly to Lees of Scotland, when snowballs and Iceland collide. So as you may or may not know, Lees of Scotland is a producer of Scottish food products, and its most famous product is probably the snowball, which is a delicious marshmallow, chocolate and coconut work of art. So if you're ever in Scotland, please buy one. They're very nice. So this wasn't an HMRC tax tribunal. It was actually an employment appeal tribunal, but it relates to a staff holiday savings scheme, which bears an enormous similarity to the savings scheme in the Iceland case of a few years back, which was about a Christmas savings club, which fell foul of national minimum wage regulations in 2019. and the business was then faced with a £21 million NMW arrears assessment. So what happened with Lees, and it's definitely worth having a look at this case, if the savings club, Lees allowed its staff to voluntarily make savings throughout the year by paying money into a holiday fund. When they made the contributions, the money that was deducted from their wages resulted in pay falling below NMW rates. So HMRC has long held that if savings club funds are held in a bank account, the employer can access and use, the employer is receiving a so-called benefit from that scheme. So in this case, the Employment Appeal Tribunal unsurprisingly found for HMRC and overturned the original employment appeal decision. They concluded that the Employment Tribunal had just asked the wrong questions. It should have asked if Lees could use the holiday fund money without legal limitation whilst it was retained in the fund. The monies were kept as part of Lee's business account and not kept separately, and the company could therefore benefit from the accrued interest and use the funds. So the Employment Appeal Tribunal acknowledged that had the holiday fund been kept in a separate third-party account, there would have been no breach of NMW. So an interesting one to move forward on, possibly, in terms of savings schemes. So I'll move on to S&L Barnes. So this is about a Sky TV contract, which in terms of my comment at the top, Sky TV contract, it's probably IR35 then, because it's turning out to be the case that the vast majority of people who've been engaged by Sky are falling under IR35. So Stuart Barnes in this case is an ex-rugby union player, became the voice of rugby on Sky TV. He provided his services through a personal services company, S&L Barnes, and he'd originally won his first-tier tribunal case on IR35, but the upper tribunal overturned it on appeal. So the judiciary went back to the bog standard ready-mix concrete case, 1968, to determine whether IR35 should apply to this case or not, and also referred to kickabout, as we've heard before. And there is a 29-page long decision, which actually comes in quite handy in terms of IR35 because it does provide quite detailed guidance for tribunals and tax professionals on it. Essentially, how to carry out the balancing exercise to be worked out in terms of does IR35 apply or not. So it's worth reading the decision, not least because it's actually written in plain English and it gives a good insight into the judiciary's thought processes. So a liability arose on that case of £700,000. So I'm going to move on to the Police Service of Northern Ireland case, which is about holiday pay. Now, we thought we might have heard the last of holiday pay, but this one came up late in 2023, so it is actually more or less just within the last 12 months. So this particular case was about the trade union Unison taking cases on behalf of Alexander Agnew and 3,700 of his colleagues, who were a mixture of police and civilian staff. So the workers became entitled to claim arrears of holiday pay, which were based on a calculation of so-called normal pay as opposed to the method upon which it had been paid to them originally, which was basic pay. So for this purpose, normal pay includes overtime, but an assumption had been made to remunerate the officers and civilians using only the basic pay rate whilst on holiday, as they weren't actually working and could therefore not be accruing overtime payments. However, under European case law, employees have been deemed to be entitled to normal pay during periods of annual leave, which includes an element of overtime based on previous week's averaging. And that was borne out in the Bear Scotland case, which is also worth a read, actually. And it was decided that employees who regularly work overtime should receive additional holiday pay because there was an expectation of normal pay, which has been created by the act of being asked to work and agreeing to work overtime. So one of the key things in this case was that when the working time regulations were introduced back in 1998, there was a protection brought in against pay claims that go back a certain number of years. So that decision stated that where a gap of 3 months or more between holiday underpayments existed, future claims would not succeed. And the deduction from wages limitation regulations 2014 came into effect in 2015. And that had the effect of amending the Employment Rights Act 1996 and introduced a so-called backstop, which had the effect of time barring claims relating to unlawful deduction from wages, including holiday pay, which were made more than 24 months prior to the date of the claim. So it limited the claim to 2 years effectively. But key to the Police Service Northern Ireland case was the fact that the backstop rule was never enacted in the Northern Irish jurisdiction. And if it had been, the arrears would have amounted to £300,000 or thereabouts. However, the Supreme Court determined that due to the absence of the backstop in Northern Ireland, the claimants would in fact be eligible to claim up to 35 years worth of miscalculated holiday pay, which is nearly as long as I've been working in tax, so that's a blooming long time. It goes back to November 1998, and that amounted to a bill for Police Service Northern Ireland of more than 40 million, which has given them a serious problem. So I shall just move on and conclude with a note on the Professional Game Match Officials Limited case, which I've called Kicking Ball Down Road in my lovely Yorkshire accent. So essentially what happened here was we've been waiting for this decision for ages because the case was heard in June 2023 and it took 15 months for the case to actually be decided on the 16th of September by the Supreme Court. So everybody's kind of been waiting for this decision to come out because it was expected that the Supreme Court would clarify the method under which these cases have to be approached in future, and especially in relation to deciphering whether mutuality of obligation actually is relevant in a case. Unfortunately, the Supreme Court didn't issue what we would think of as a final decision, but they've remitted it back to the first tier tribunal to remake their decision, which actually was probably correct in a legal sense. But they did make it clear in their decision that the totality of all pointers points to correct status determination, and you can't just cherry pick the bits that you think are going to be found in your favour or your client's favour. So because that really will skew the result. And again, we're back to looking at the whole fact pattern, looking at the whole of the situation. So the Supreme Court upheld the decision of the Court of Appeal that it was a necessary but not sufficient condition to create a contract of employment, but that it doesn't necessarily mean that a contract of employment is created by mutuality of obligation as a standalone pointer. So they dismissed Professional Game Match Official Limited's appeal on both of the grounds of mutuality of obligation and control. And essentially, what this case tells us is that the 1968 ready-mix concrete three-stage test is still relevant when determining employment status, even though that case was decided 46 years ago, and work and the way in which work is done has evolved incredibly much in the intervening period. But we still have to go back to ready-mix concrete and go back to first principles. And the way things that currently stand in the employment status piece, and the landscape may have changed for employees and workers, but the principles of the original legislation still apply. So whether we like it or not, this is what we still have to do. So essentially, that is my summary of the tax cases that we've had over the last 12 months. Let me just have a quick look and see if there's anything in the Q&A. I don't have any questions, but actually, just while we're on the case of questions, somebody asked me a question the other day while I was speaking at a conference, saying to me that they'd noticed that a group had been set up called the Employment Status Consultative Committee, which is looking at the whole concept of employment status. So in terms of the cases that I've just been reading out to you about employment status in particular, what is that group trying to achieve? And the point that I made to them was that the situation with employment status at the moment in the UK is very, very complex. Most employers don't understand it. A lot of agents have a fair amount of problems getting their heads around it, because at the end of the day, there isn't actually any legislation set down, in the tax manuals, in the Tollies and Kroner and all the other various places where you can find tax legislation. And actually, most employment status cases have to be looked at in terms of previous tax case precedents, etc. So it's very, very difficult for most people in the workplace to try to take people on and decide which status they fall into. Are they employed, self-employed, or for legal purposes, are they employed, self-employed, or worker? And it seems to get ever more complicated by every case that comes out. Just adds an extra layer of complexity to it. And the only legislative provisions that we have are in relation to chapters 7, 8, 9 and 10 of Part 2 of ITPA 2003, which relate to managed service companies, umbrella companies, IR35 and off-payroll working. And that's only because in the year 2000, the IR35 kind of came into existence, if you like. So it's just that all that those legislative provisions tend to do is to cover tax avoidance mechanisms, really, and not really a lot else. So it still leaves many people in the dark. So that is basically what the Employment Status Consultative Committee is trying to achieve, is to look at whether the whole situation regarding employment status just maybe perhaps just needs to be totally reconsidered by the UK government. I'm fairly sure that HMRC feels as frustrated as tax advisors and employers alike. But unfortunately, they can't just go off at a tangent and start acting differently without ministerial approval. So I guess the job of the Employment Status Consultative Committee is to convince ministers that there's a case for change. And let's hope and pray that somebody has the confidence and the wherewithal to take up those suggestions and work with us to try and do something about it all. So I could see something then that just popped up in the chat. Yeah, John has said it's amazing that ready-mix concrete is still relevant after all these years. I know, absolutely right, John. It was a decision and a half, actually. I think Judge McKenna excelled himself when he set out the test for deciding on whether an employment contract exists. But actually, you know, it's quite difficult to look at, you know, the situation where you decide that the whole of employment status, as far as HMRC is concerned, is based on sort of whether somebody falls under the tests that are set out in the ready-mix concrete case. So you're looking at employment first as opposed to self-employment. And obviously the CEST tool, the Check Employment Status for Tax tool, is also totally geared up to looking at employment first rather than examining whether somebody might be self-employed first. So yeah, that's the situation we find ourselves in, but you never know. We might be able to change things over time. I'd just like to remind everyone that we've got a live poll in relation to this webinar. I would encourage people to complete it and give me some marks out of 10 or out of 5 or whatever the number is. But please do tell us what you think of this case, of this webinar rather. So we've not got very long left to go. I'm just going to double check on the Q&A box just to make sure that I've actually not got any additional Q&As going on in there first of all. I've just got some silly boxes that have come up in my thing. Here we go. So yeah. So I can't really see anything else at the moment. So I guess what I will do is just to move on to the next slide, which is to tell you about keeping up to date with all the latest tax and other professional news, including latest information, guidance and resources on ICAS.com. And looking ahead, we have a range of events in the weeks ahead which you might wish to sign up for. On the 24th of October, we have a webinar about advising partnership clients, which is tax issues you need to be aware of. My colleague Chris Campbell is going to be delivering that one. And on the 21st of November, myself and Chris are going to be delivering our autumn tax update following the budget, which is part one of the tax update. We're going to be covering off owner-managed business and employment taxes matters that have arisen from the budget. On the 19th and 20th of November, we've got the CA Summit of 2024. Please join our award-winning virtual event, and that will connect you with the big ideas that are shaping the way in which you might live and work. And we also have an in-person event on the 14th of November, which is the ICAS Insolvency and Restructuring Networking and Seminar for Industry Professionals, which is always a good do. And links to sign up to all ICAS events are available at icas.com/events. So it only leaves me to thank you, the audience, for joining this webinar today. I do hope that the webinar has been helpful to you. Thanks for joining us, and until next time, goodbye.